Hello everybody, welcome to the Sovereign Seminar on Portugal generally, but more particularly we're going to be telling you about investment opportunities in Portugal, the regime for golden visa applicants, and the regime for non-habitual residents, which is a rather attractive tax proposition that Portugal offers. My name's Howard Bilton. I'm the chairman and founder of the Sovereign Group, which I started in Gibraltar in 1987. But I'm currently speaking to you from Estremoz in Portugal. Today it's raining, but I can tell you that for the previous 14 days, we've had clear blue skies, fantastic weather, and I'm in the beautiful town of Estremoz, which the weather has shown it off very nicely. I'm down here for two reasons. One is because I like it, and secondly is because I make wine here. So I'd rather put my mouth where my money is, or my money where my mouth is even, and invested in Portugal. For me, the attractions of Portugal are numerous, not only the fine weather. Lisbon is the sunniest capital in Europe. It's also the oldest established capital in Europe. The weather is great. It's by the sea. The beaches are near. The country is thinly populated. Most parts, so you can get a lot of nice space, which might be important in these times in particular. There is excellent food, there is excellent wine, prices are cheap, reasonable should I say. Cheap might give you the wrong impression. The food is fantastic. Portugal has everything in my view, and I think that's a view increasingly shared around the world. And the only thing holding it back is a lot of people are yet to visit, but when they do, they'll find they're made very welcome by very friendly people, and the lifestyle here is second to none. I, in fact, have voted with my feet and became a resident here 2 or 3 months ago. I still generally live in Hong Kong, but I'm increasingly spending time in Portugal, and I wanted to make sure that I'd have the right to come here after Brexit. As a UK passport holder, that was important. And I'm seriously thinking about moving down here next year. So for me, this is the place. And I think we're all going to try and convince you as to why in the following session. The format of this seminar is very simple. We have 4 expert speakers lined up for you to listen to. We're going to give them a few minutes each, but mainly we want to turn it over to you and invite you to ask questions which are of interest to you. There's a panel which you should be able to see where you can type your questions. I will be filtering those and asking the ones which are of general interest to most people as I see it. And I know I have some friends and colleagues on the webinar, so I'll certainly be filtering your questions as I expect the usual rudery, but we'll see how that goes. But we'll get in as many questions as we can, so feel free to start typing whenever you wish. We're aiming to start the Q&A session at about 20-25 past. But put those questions in anytime you want, and I'll pick out as many as I can. But as I say, I will try and concentrate on those which I think are going to be interest to most people on the webinar. So welcome again. Let me now briefly introduce you to the speakers. First up, we're going to be hearing from Alfonso Duarte. Give him a wave, Alfonso. Thank you. Who is the Economic and Commercial Counsellor for AICEP, Portugal Globe Trade and Investment Agency in Thailand. Welcome, Alfonso. You're going to be first up. Next is Kerry Prattley. Give us a wave, Kerry, who is the Residency Specialist within Sovereign. Shelley Wren is going to be speaking third. She's the only female, so you'll be able to identify her very easily, but you can give us a wave anyway, Shelley. And she is the Business Development Manager for Sovereign in Portugal, recently moved here from Dubai and is now heading up our residency division in our Portuguese office. And last but not least, we welcome a guest speaker, Luis Leon from Deloitte. Contrary to opinion, accountants are interesting, aren't they, Luis? And he will be giving you some crucial information about tax in Portugal.
Not to bore everybody with tax.
That's it, yes. We're going to be thrilled and delighted with the tax comments. So, Alfonso, over to you. Please tell us a little about Portugal and why people should be investing here.
Hello, Harold. Hello, everybody that are watching us. Uh, Thank you for the pre-presentation of what I would like to say, but okay, you did it. It's more, it's on the first. It's better than me. Well, I'm not. Thank you for that, and I would like to thank the sovereign to give this to accept this opportunity to talk and to speak to say about Portugal. Why Portugal can be a good choice to invest and to live. In a first big example, I will not only talk about real estate and golden visa. I will talk an overview about Portugal. Why we think that it's a good destination to invest and to live. For example, I would say that on the recent years, and the big multinational and the big companies decided to invest in Portugal. And that fact was really important to understand why BMW decided to invest on a software engineer center, why Volkswagen decided to install a center to develop some of the software of the cars, why Siemens, why Bosch, why Mercedes. So let's say in a first big overview, this means something for those who are looking and watching us. Let's say that Portugal, it's real probably a good destination to invest. As you know, Portugal, we are a member of European Union. We have the euro currency, and I could say, and I can say, that we have one of the factors, we have a stable democracy and a political stability. So these are factors that some of the foreigners and the investors, they say, where I'm going to put my money, where I'm going to take part of my life. So this is these are factors that are very important. And Portugal, as you know, we are on a strategic location in Europe. We are in 1-2 hours from the main points and capitals of European countries. We are a bridge to the Portuguese speaking markets. Well, what does this mean? This means that we, with historical past, we had connections with the Portuguese speaking countries as Mozambique, Angola, Cape Verde, Guinea, São Tomé, and Brazil. So let's say that we are a good hub to reach these countries, same language, and also we are the nearest European country to America. So let's say that our strategic location, it's very important also to the people feel, well, I'm on a 2 hours flight to London or to Paris and 7 hours to US. So let's say that we are on a real strategic point in Europe. Even though, well, what are we Portuguese, what can we give, what are our competitiveness and business environment different? Unfortunately, and before this normal fact, it was the coronavirus, Portugal, we were going on a good way on growing. We were on growing with a good GDP. Our exports were having a fantastic growing. Our unemployment was going down, but unfortunately, we hope that this will be a gap to forget and to continue. And let's say that we were on a good way of our performance as a country economically. Our main markets and top export markets were mainly the European, because easy, the easy connections. I would say Spain, France, Germany, UK, were Italy in Europe. were the most important markets, and US on the other side, and Brazil and Angola, of course, were our biggest markets for us. And I would say that in terms of goods and service, tourism and IT, in terms of services, and in terms of goods, well, machinery, common metals, plastic minerals, agriculture, and clothing. Let's say they were the main sectors that we are competitive and we were exporting. But we must look Portugal not to invest not only on the real estate, of course, but who knows in industry, because the export sector is growing and our industry is very competitive. I can tell you that the OECD considers Portugal the second most open country to make investments, because we don't have restrictions, we are not discriminatory, we don't classify foreign investments, we don't have restrictions. So we were considered the second most open country to invest, because we have, according to them, we have talent, and I will further tell more details about this. We have talented workforce, we have good infrastructure network, and we have innovation capacity. So and also a high quality supply chain. So let's say that we have some of the characteristics to whom want to invest, very important. Just to have an idea, very recently, some of the big companies, international companies invest, like Bosch, Kirchhoff, Renault, Lawak. So big investments have been done in Portugal because of these factors that I will tell you. We consider that we have special competitive advantages. What are our special competitive advantages? For instance, what we consider the talent. The talent, and according to the Benchmark International, the talent of the people, the young people. I can tell you that the World Talent Report considered Portugal recently the seventh skills in language, the 15th management in education, the 18th on the university education, the 13th on skilled labor rank. This means that we, in terms of human resources, we are very well prepared. We have young people with talent. We have young people that have creativity. So let's say one of the big advantages is the people, that the people, and we have the highest rate of engineering. We are the second highest rate of engineering graduates in Europe. Usually Portuguese young people, and most of the people, we speak not only Portuguese, but English, French, Spanish. It's normal for us, because since the 6 years, the kids start to learn a foreign language. So it's, let's say, the people, it's easy to communicate, it's easy to establish connections with Portuguese. Also, Portugal, it's one of the top countries providing technological services. According to the World Economic Forum, Portugal, it's considered on the 32nd place of the most technological country in the world. So that's why all these companies, international companies that I told, are investing in Portugal. We have also, I would say, very good infrastructures. In terms of transport, we have quality on our roads. We have a big and dense railway network. We have in mainland 4 big airports, international airports, and we are efficient in terms of seaport services. Let's say Portugal, it's considered the 21st country in the world with the better infrastructures. So let's say we have people, we have technology, we have infrastructures. To have an idea, we can go from Lisbon or Porto to through Madrid to Paris, through Germany, in terms of communications, in terms of transport. So it's also one of the factors that shows our competitiveness internationally speaking. As I told you, we have the 2 main airports, port in Porto and Lisbon. Just to have an idea, from Porto we had 99 direct flights, and from Lisbon we were flying to 146 destinations. That shows how important and how we are connected to the world. In terms of communications also, we are very well ranked according to the European Union. We have a good and high speed and advanced infrastructure in terms of telecommunications. I would say that's also a good factor to invest in Portugal. So after this, I would say also we have some interesting and attractive incentives. Not only for the productive investment, because we have some tax and credit financial support. We also have some tax and credit financial support to R&D and to job creation. I would say that we incentivize also reducing some of the taxes, and after Luis will probably talk about this, the incentives and the tax that Portugal try to we have to attract the investment in Portugal. This is an overview about the incentives. Also, we try to attract expat foreigners, including not only for the retired, but for the young and technological professions. We have some incentives for that. Luis probably will talk about. And I would say that yes, we have some conditions to make our country interesting also in that way. And another thing that Howard told, it's our quality of life. Yes, we are considered one of the world's best quality life country for expats. We are the first considered by the International Expat Insider. We are considered the #3 global peace country after Iceland and New Zealand. This is also a factor that gives some confidence for whom would like to come to invest or to live in Portugal. And we also are considered.
So you're referring to the fact that Portugal is crime-free, aren't you? It's considered the 3rd safest country in which to live, and there is very little crime in Portugal.
Yes, yes, correct. And we also we are considered one of the world's best destination in tourism. And to end, I will talk about what is ICEP. ICEP, it's a government agency, and what we try is to promote Portugal as a destination to invest, and also to promote our products. We are a country, we are an agency that it's a one-stop shop where you can come depending the amounts of investment, depending on the situations, and we are here to help, to inform, and to connect, establish bridges between Portugal and who want to invest or who want to export. So let's say that we are a support in Portugal, and we are here to help. And let's say that probably Portugal is now the right choice and the right time to come. So you are most welcome, Howard. This is what I can say.
Thank you very much. Yes, Portugal is certainly a very welcoming country. As I touched on earlier, the people are extremely friendly, and that's noticeable when you come down here. Kerry Prattley is now going to tell us about the one particular program, which is the Golden Visa program, which is specifically set up to attract, I suppose, medium to high net worth individuals to Portugal. Kerry, over to you. You're on mute, Kerry. You're on mute. Okay, try again.
Yeah, thank you.
Good.
Okay, back in the room. Yes, the Golden Visa. This is one of many residency programs that are on offer, to Europeans and non-Europeans, for those who wish to either establish residency in Portugal, either as a primary location of residency, or also for those who wish to establish a second residency, or possibly a plan B. As I mentioned, there are a few, but the Golden Visa or the Golden Visa Residency Permit is one of the most popular. It's an investment-based program. As I mentioned, it enables non-EU citizens, their families, i.e. their children, and also the investors' parents, the ability to gain the right to live, work, study, establish a business, and so forth in Portugal. One key matter here, however, is that the minimums, in order to attain residency, investors and or their families only actually need to spend on average 7 days per year in Portugal. So what this means is it's a program that's open to everybody, is attractive to those who wish to establish primary residence in Portugal, but also those, as I've mentioned already, who wish to have a second option and take advantage of the other key benefits. So, for example, when we talk about a visa, people assume it's something, a stamp in their passport. It's not actually that. What you gain is a Portuguese residency card, which in turn is is part of Europe, and it acts as an ID card, which can be utilized to travel visa-free throughout the EU as well. One of the other benefits. Obviously, if you do decide to live there, you are also, children and so forth have access to healthcare. The number of education facilities in Portugal, as Afonso mentioned, and people I find often aren't aware, the language levels in Portugal is very high. So people are often concerned that they don't speak Portuguese. But every time I've been there, and whenever I'm dealing, wherever you are, whether it's the shops or, meeting with lawyers or partners and so forth, you do find that the level of English is very high, apart from, in addition to other European languages. So the main criteria to qualify for the Golden Visa is to make a qualifying investment. Now, many people are aware that one of the, that you can purchase property, and that is correct. There are a number of property purchase options or investment options that will qualify individuals and their families for the Golden Visa. But also there are actually 8 different categories. So they range from property to private equity funds, regulated private equity funds, to, if you wish, you're able to establish a new company or invest in an existing company. You can also, if you prefer, you can just make a deposit into a bank account with slightly higher investment requirement of 1 million. The property is anywhere from 280, depending upon the location. The investment funds are 350. But whatever it is, it is actually a broad-ranging program that provides non-EU EU residents and their family direct access and to Portugal. So there are investment options available to suit all requirements. And yes, I'm keeping this as brief as possible for the purposes of the webinar. But you know, the reason why I believe clients should use Sovereign to do this is that we don't just focus on one section of the investment environment. We do offer all, and we provide an end-to-end service. So from advisory services to determine which option is most suitable for you, all the way through to application preparation, banking, fiscal representation, and so forth. So we do provide the full service. And just to touch on one other area, Howard, you know, the Golden Visa is the most popular program. For those people who do intend to travel and move to Portugal, you know, today or in the next few months, there is also another option. If they have a passive income, i.e. a general income, you know, from pension payments or an equity, a portfolio of investments, or you know, dividends from companies, or an property investment portfolio, for example, then you are also able to gain access to Portugal via the D7 route or the passive income route. And actually, it's not the requirement, as opposed to the investment, is that you have this passive income. And you know, for a single investor or a single applicant, the requirement is only 767,620 euros per annum by an income. So, or for a family of 4, so an applicant, their spouse, and 2 children, you'd only need to have a passive income of 16,000. So that's another alternative to the Golden Visa. Obviously, there's more to it. If you are becoming resident, then we need to look at the tax side of things, which Shelley and Luis will be talking about. But the important thing is that we have all the options available, and the you know, the colleagues and the experience to offer those to all of our clients.
Thank you, Kerry. Yes, I think the bare bones of the structure of the Golden Visa program can be summarized quite simply. If you invest in Portugal, and the amounts, as Kerry said, start at relatively small, 280,000 euros. The most popular way in thus far has been purchasing prime property in Lisbon or Porto for €500,000. In return for that investment, you and your family get an immediate resident status in Portugal, so you then have the right to live and work freely as any other Portuguese person or resident would do. And then 5 years after residency, you can apply for a Portuguese passport, which is an important factor. And unusually with the Golden Visa, there is no particular requirement to live full-time in Portugal in order to qualify for nationality. For most other visa statuses, of course, you are able to apply after 5 years, but the Immigration Department in Portugal have confirmed that you will normally have to have spent the majority of your time in Portugal to qualify for nationality, but that doesn't apply to the Golden Visa. This is a specific exemption whereby 5 years after having obtained resident status through the Golden Visa, you would be eligible and would normally be granted nationality without actually having lived here full time. So there are quite a lot of Golden Visa applicants who are applying but are not intending to move to Portugal in the short term at least. But they find the idea of having an EU citizenship extremely attractive without the requirement to live full time. So that is a substantial advantage of it. I just butt in one further thing, Kerry, as I've got a question, which I think is very relevant. As an EU citizen, would I need Golden Visa to get residency? No, you wouldn't. As an EU citizen, you have the right to come to Portugal and live and work without any type of investment, because you are treated for these purposes as, well, Europe is treated as one great pool. So you don't need this. This is a status which is particularly relevant to non-EU citizens. And therefore, of course, Brits at the moment, UK nationals, do not need this. But by the end of the year, they may well do, because we will have left the EU for most purposes, at least, or all purposes. So that is changing. And right now, UK nationals can obtain residency as of right, but only until the end of the year. So I would urge any UK national who is thinking of coming to Portugal to get down here before the end of the year and get a residency application banged in, just in case you have any intention later, even if you have no current intention. So the changes in the golden visa are coming, aren't they, Kerry? We believe that a qualifying investment after the end of the year will no longer include Lisbon or Porto property. That is almost certainly going to happen, but there are plenty of other options. Property investment outside of those places is a possibility. Excuse me. And so that property investment route is not closed, but it is closed as far as Lisbon and Porto go, which has been far the most popular.
That's correct, but we do have other options available outside of those regions, and as I mentioned, there are a number of other options available. So the programs, will continue, and we'll be able to assist with in determining the most suitable investment and attaining the golden visa for clients and their families.
Yeah. Thank you, Kerry. I'm now going to turn the microphone over to Shelley, who is going to tell us about the non-habitual residency program. As I mentioned, no need to tell me, Shelley, because I've done it and applied successfully, but everybody else, I'm sure, will be interested in this.
Thanks, Howard. Hi, everybody. Yeah, so a little bit of background on Sovereign in Portugal as well. The business opened its doors some 3 decades ago and was specifically set up to help foreign investors and retirees with all aspects of the fiscal nature of moving into country or operating and setting up a business. So I think before I dive into sort of the variety of services which we can do later, the NHR program has been the one that has certainly been a topic of interest for many of our clients since the regime was launched. And so whilst we work on behalf of our clients for corporate, on a corporate and personal level, I would say the majority of our business, particularly over the last few years, have been clients that have been coming to live in Portugal and take advantage of what is considered to be one of the best tax regimes in Europe. The scheme is by no means a tax-free holiday. It is an efficient management of one's fiscal affairs and reduces tax obligations by the nature of the assets that you may have in other countries where your foreign sourced income is not taxed in Portugal. And whatever your asset base, it is critical that assessments and planning is done around the NHR application, because you may be coming to Portugal to work. And as Alfonso said, there are many multinationals now in countries such as Mercedes, Google, Amazon, and coming into work as an employee in Portugal under the NHR scheme affords a very attractive tax regime where you're only taxed at 20% if you fall into a high-level profession. If you're self-employed or you're setting up your own business, again, the regime can be very attractive, and we help clients understand how that actually functions in the realms of what business activities they operate, both in country and potentially internationally. Many of our clients are international global citizens, and so as part of the service we offer, we have a multidiscipline team that work and support us in 26 countries where we operate. So as a global expatriate or a global citizen, we can help assess your NHR qualification and what is the best route for you in country. And we work very closely with Luis and Deloitte, who support our activity to plan correctly, and cross-border tax planning is something that we believe is critical when decisions are being made if you're going to become resident in country. For those clients that are not becoming resident, the NHR regime is clearly not required. And as part of our service, we're obviously very actively involved in providing investment and property solutions. And that's something I can help talk about on the panel today, because I'm fairly well read on the property market, as is Howard. And so the NHR scheme is for those that are becoming resident and are coming to live in country. If, of course, you are just going to be going for a golden visa option, tax is not really applicable to you. as you're not going to reside in country. So that's a very sort of brief overview on the fact that the benefits are extensive. It is exactly the right scheme for those individuals that are looking to operate commercially in country and also employed or retired. So we help clients in many different circumstances, and our business in Portugal, we have our own team of accountants. We're based in the south of the country, and all of our team are multilingual and support me in our business development activities with our client base around the world. So I look forward to fielding your questions today. I'll hand back to Howard and over to the real tax expert, Luis, and back to you, Howard.
Yes, thank you, Shelley. Yeah, I think it's important to understand the difference between resident and tax resident. So you can have the right to reside in Portugal, which all EU citizens have. Brits, UK nationals, have the right to reside in Portugal until the end of the year, when we are no longer considered as EU for these purposes. So in order to formalise that position, you need to turn up in Portugal with your passport and register at a local town hall stating where you are going to live in Portugal. So you need an address, which can be a rented property, and then a passport with you, and you just turn up and say, I've arrived, I am now wishing to get formalise my resident status in Portugal, and they will issue you with a certificate of EU residency. You then are a resident of Portugal. That does not mean you are a tax resident of Portugal. Tax residency follows where you live, so you can have the legal right to reside in Portugal without being tax resident here. As soon as you take out residency in Portugal, there will be a presumption that you are tax resident, but that can be rebutted by the fact that you're still living somewhere else where you're resident and spending the majority of your time back in your home country. So, for example, a UK national could now come to Portugal before the end of the year, declare himself as resident here, go back to the UK, and he will be tax resident in the UK, not in Portugal. So he'll have no tax obligations in Portugal. He may have to show Portugal that he has no tax obligations and show that he is in fact still living in the UK, and that should suffice. So just because you're resident doesn't mean you are tax resident, and just because you're tax resident somewhere else doesn't mean you're tax resident in other places at the same time. It is quite possible to be tax resident in many different places at the same time, and therefore in theory liable to tax in each of those places. And then tax treaties would generally decide who gets the taxing right. So if we go back to our example of the UK national who takes out residency in Portugal but lives in the UK, he will either be dual resident, but the taxing right will be given to the UK because he spends most of his time there or all of his time there, but he still is legally resident in Portugal. So NHR is a way where if you become both resident and tax resident in Portugal, you can obtain tax exemptions, so pay very little tax in Portugal. And it's important to understand that distinction between legal residency and tax residency. And then with the golden visa, you become a resident, but you do not need to be a tax resident. You wouldn't be a tax resident unless you come and live here. If you do come and live here, using the golden visa scheme to get entry, and again, that's only applicable to non-EU citizens because EU citizens have the right without it, then you would become tax resident and you can apply for the NHR status, which will mean you pay very little tax here as long as you're carefully structured. So it's important to understand these distinctions between legal residency, tax residency, between the golden visa and the EU citizen who can come here as of right, so does not need to invest and obtain a golden visa to come and get the right to live in Portugal. And with that, I will turn over to Luis, who will tell us a little bit more about the taxation and perhaps correct anything I have misunderstood there. Thank you, Luis.
No, thank you, Howard. Also, well, first of all, from Portugal, good morning to everybody attending the seminar. In terms of tax, I'm also going to take this opportunity, as I'm here with somebody close to the Portuguese government, to also not only explain to whoever is listening to the panel here at the webinar, but also to give a couple of messages to the Portuguese government, which is also very useful in order to improve the Portuguese NHR regime. Ballpark, the NHR regime is a good regime for people that are physically moving into Portugal, living here. because you need to be tax resident of Portugal to apply for the NHR. And there is no disadvantage of becoming Portuguese tax resident and getting the NHR regime. So in that sense, it's a no-brainer. If people move to Portugal and become tax residents here, if they're eligible for the NHR, they should apply for it, full stop. Just to add that people may apply and are eligible as long as they become first resident and they were never a resident of Portugal in any of the 5 complete tax years preceding that date. So if people were never resident of Portugal, never applied for a tax number, they are eligible and they should. Another word of advice, when they move, they should apply immediately for the NHR as soon as they can, as soon as they've complied with everything, because there is a deadline to apply for the regime, which is the end of March of the year after you move. If you fail to comply with that deadline, you lose the NHR altogether. The NHR is valid for a decade, so it's 10 complete tax years. And if you miss the initial deadline for the first year, you may not apply for the NHR for any of the 10 years. So it's not just a matter of losing the first year and then getting for 9. You lose the right to apply for the NHR regime. So these are very critical, very easy pointers to point out. As a summary also, what has been mentioned in terms of the 20% is applicable to employment or self-employment income of a given list of activities. What is the downside of getting a business in Portugal and getting employment income in Portugal? It's that we do have a special tax regime, but we do not have a special social security regime. So if you open your business here in Portugal and you get a salary, yes, you pay 20% of tax, but you have to pay 35% of social security between the employee's contributions and the employer's contributions, uncapped, because that is the regime of Portugal. We are the 3rd most expensive country in Europe in terms of social security after France and Belgium. And that's one of the key pointers for the Portuguese government, which is we have been since 2009 asking for a special social security regime that would link into the NHR regime, because that would make the regime even more attractive in terms of employees. In terms of investments and income, Howard and Shelley have made key points in terms of restructuring. Let me just dig a little bit deeper in terms of what we mean by restructuring. The regime grants exemptions because the default position of an HR is tax resident. So by moving into Portugal, you are first and foremost taxed on worldwide income, unless you benefit from an exemption that the NHR grants. What are the exemptions that the NHR grants? The most common are any investment in foreign real estate, be it capital gains or rental income, foreign dividends, foreign interests, and key issue, nothing can come from a tax haven. So if people have invested and have their investments structured through any country, any territory that is qualified as a blacklisted country for Portuguese purposes, that does not benefit from any exemption, and it's actually taxed at an increased rate, which goes from the normal default position of 28% on investment income to 35%. Locations such as Gibraltar, Cayman, BVIs, Hong Kong are listed as tax havens. So it's really, really important to look at the way you structure your assets so that you do not get trapped into paying 35% of tax in Portugal, where you could benefit from an exemption on dividends flowing, for example, from a UK company or from a Cyprus company, from a Maltese company, which are exempt under the NHR regime. But if it's a dividend from a BVI company, actually taxed at 35%. Also, a very typical issue is the issue around trusts, and Howard and Shelley had asked me to talk a little bit about the Portuguese regime on trusts. We do not recognize trusts in our civil law, but our tax law does have provisions based on trusts. And these provisions were actually drafted in the law and by suggestion of a committee in 2015, where one of our former Deloitte partners actually took a seat on that committee, and it was by suggestion that we started to have some clear guidance on the tax regime around trusts. What the Portuguese legislation is drafted around is that trusts are not supposed to be used as a mechanism to hold assets for the settler of the trust. It's not a mechanism that is seen to be the equivalent of a holding company or something that you could use as your own personal investments. Trusts are drafted in the legislation as something to be on to pass to future generations, which explains the reason why trusts are taxed on any distribution that are made to either the settler or any beneficiary of the trust are taxed as investment income. And it's not the difference between capital that was invested into the trust and whatever are the distributions from the trust. Any distribution is taxed at investment income at either 28% or 35% in case it's from a tax haven. And the unwinding of trusts are considered for the settler a capital gain, taxed at 28% or 35%, depending if it's blacklisted or not. And then only when it goes to a further generation may it be absolutely tax-free because Portugal does not have inheritance tax on non-Portuguese sourced assets. So any assets that are located outside of Portugal are not liable to inheritance tax. And in a nutshell, this is the main regime around trusts. Then we also have what we call transparency rules or CFC legislation applicable to also trusts, whereby if any beneficiary of a trust has more than a 25% interest position in a trust, that person will be taxed on the underlying income of the trust, irrespective of actual distributions. Howard, Shelley, we've had discussions on discretionary trusts where people don't really know what is their position. We also have anti-abuse provisions in Portugal. So there is quite a very, very gray area around trusts and discretionary trusts where tax authorities could actually challenge positions of people having trusts. If the beneficiaries of the trust are the immediate family members and all of the family members moved into Portugal, it will be very difficult to argue that see-through and transparency should not apply in the Portuguese tax regime. So additionally to everything that has been said, just tie into this part that I just mentioned about inheritance tax. Portugal does not have a wealth tax. Normally I like to joke around the fact that Portugal does not have enough wealth to justify creating a wealth tax, and that's one of the reasons why we don't have it. We don't have any inheritance tax on foreign assets. So we do have an inheritance tax in Portugal of 10%, but it's only applicable on Portuguese assets. And even on Portuguese assets, there is an exemption directly applicable to direct family members, be it a spouse or children or parents. So also from a wealth and inheritance tax position, Portugal is quite attractive in the international arena. We are one of the few countries that does not have that type of taxation. So on the NHR, it is a very interesting regime.
Yeah, thank you very much. I'm going to stop you there if I may, as we have minutes left only, and I've got a raft of questions. I think you've summarized the tax situation very well for us there. Thank you very much. I can perhaps summarize quite a few of the questions that are coming in as follows. If you're an EU citizen, you don't need a golden visa. You can come here as of right, and that will continue indefinitely. As a UK national, you can't apply for a golden visa this year. You could next year, and you may need one because you'll no longer have the right to come here as an EU citizen. But right now you do, and there is still time to make your application before the end of the year. The Portuguese do like to take their time with these things, but we are able to process those still, but it does require your presence. So anybody who thinks they may wish to come and live in Portugal, who's a UK national at any time in the future, now would be a good time to leap on a plane, get down here and do the necessary, which is essentially presenting your passport to the local town hall and telling them where you're going to live in Portugal. So renting a property so that you have an address. That is an opportunity which is fast disappearing. My view is certainly that if you have any inclination to come and live in Portugal at any time in the future, now is a good time to do something about it. There is no suggestion that the NHR regime will disappear, but no favoured tax regime lasts forever. And there are rumours that they will change the NHR regime and move from 0 tax to 10% tax. So now is a good time to lock in the 0 tax deal. As Lewis has very well explained, it is a 0 tax deal if you have certain types of income and if you structure it carefully. If you just do not do anything about structuring your affairs, it's likely to result in tax at 35%, the normal rate in Portugal. So you do have to be careful about where your income is coming from and how you structure it. But it is true to say, in general terms, that the NHR regime gives you a 10-year tax holiday if you are careful and structure it, and expert advice is needed for that. And ourselves, working with Lewis and other advisors, can help you with that. So my advice is, if you think you may come and live in Portugal, apply for NHR now. You cannot apply for NHR until you become a resident. To be a resident, you need to get here with your passport and confirm that you have arrived and that you wish to be resident. That does not mean that you are tax resident, that just means you're a resident. But if you come and you are going to be tax resident, then you need, or would be well advised, to apply for the NHR. My advice is to apply for it now, even if you don't need it, so that you are locking in your 10-year tax holiday in case there are changes which make it less attractive, or in case it disappears altogether. Why not? It's just a nice insurance policy. So that would be the way I would do it. Others are urging, well, don't apply for the NHR unless and until you are going to arrive in Portugal to live when you become tax resident as well as resident, because you don't need it. Yes, I would say that that is a viewpoint. It's not my own. I would say lock it in now while it's there and good to go. So that is certainly my view. Now, if I may, I will turn to some questions as quickly as we can. I'm rushing through this, as you can tell, slightly because we have limited time. So Simon has first of all asked how we all are. I think we're all good, aren't we? If we can just give Simon a little wave. Yes, Simon, we're all good. Thank you. That's one question. I have a question here. As an Irish citizen seeking a second home with a non-habitual tax return, are capital gains on share and investment portfolios tax exempt? The answer is yes, as long as they're correctly structured, but no if you do nothing about it. I have another question from an old friend of mine, Barry. Hello, Barry, nice to hear from you. Is the golden visa time limited, i.e. is there a Brexit cutoff of the 31st December? That's a slightly confused question, Barry. As a UK national, which I know you are, you can apply for resident status without a golden visa until the end of the year. You cannot apply for a golden visa because you're EU citizen and you're not eligible. But as of the end of the year, you'll no longer be able to be resident automatically, and you will be able to apply for a golden visa, but only next year. So you are in a holding pattern right now. I have another question here. If you've already made the investment in property, does that count towards the total? I think you mean the total for golden visa purposes. I think Kerry can nod if I've got this right. No, it doesn't. It has to be a new investment in which you specifically apply for the golden visa while investing, and in property, it's essentially 350,000 euros or 500,000 euros, depending on where you buy. Let's see what else we've got here, which could be of interest to everybody. With reference to people with UK passport, where does the application need to be lodged before year end? I think I dealt with that, but to be clear, you must turn up in Portugal. There is no way to do it remotely, and you cannot do it through the consulates Portugal operates abroad. It has to be done locally. So you need to get on a plane, and that is not going to be easy with COVID restrictions, and you'll almost certainly have to quarantine when you go back, and there are restrictions, but it's worth doing if you're a UK national, because at the end of the year you lose this opportunity. It's a good insurance policy. I have another question here. What is Portugal's appetite to enter into double tax agreements with jurisdictions that currently sit on Portugal's blacklist? Yeah, well, there is an anomaly here, isn't there, Lewis, in that Portugal does have tax treaties with a number of jurisdictions which are also on its blacklist, which appears to be a bit of a dichotomy, but nevertheless is the case. Hong Kong, where I still live, is one of those. It has a double tax treaty with Portugal, which one would argue gives it respectability in terms of tax, but it's still on the blacklist. So it's a strange thing.
Yeah, Hong Kong is one, Dubai is another. And one of the reasons is that the tax treaties are very, very negotiated, and it's a very tax technical issue to justify trade between both territories. Whereas, whether we like it or not, the list of jurisdictions is very political. We actually had jurisdictions that were taken out of the list. And then, since we have a very left-wing government and parliament for the last 6 years, some of those countries were brought back in. There has been some litigation with the Portuguese tax authorities in where the tax treaties have prevailed over the list. But it's important for people that are wanting to come into Portugal. That one thing is to come with a safe solution, which is free of any litigation with the authorities. And another is to come in with a structure that technically may work, but that in practice will give rise to additional assessments, which will give rise to having to answer to the authorities, raise tax claims and things like that. So our recommendation for the time being is that stay away from the tax havens, even if there is a tax treaty with that country, because it will make your life much easier once you are in Portugal, because you will have less litigation and will just have to file tax returns and live safely. Otherwise, you will most likely have to battle with the authorities in order to get the tax position that is applicable under the law.
Yes, in a nutshell, we frequently end up recommending, depending on the particular circumstance of the client, that their affairs are structured through Malta or Cyprus. They're full EU members, so unlikely to be attacked by their fellow EU member states, including Portugal. It is possible to do things very tax efficiently through these jurisdictions. They are peculiarly not on the blacklist, and there are tax treaties with both. So those provide opportunities which do not exist with the more traditional international financial centres, as they like to be called, Cayman, BVI, Hong Kong, and indeed Guernsey, Isle of Man, and other more traditional places. So they do not help you if you are Portuguese tax resident, whether you are NHR or not. But Malta and Cyprus do, so we end up structuring through those. I've got another question here, and I think we've got time for 2 or 3 more. If I haven't got round to your question, or we haven't got round to your question, do not despair. We're on email and can answer your questions through that medium. So this isn't the end of things. The question is, are the rules for NHR likely to change after Brexit or over the coming few years? Brexit is irrelevant to the NHR regime because NHR is granted by Portugal, not the UK. But Portugal did announce a change to the NHR regime, I think around a year ago, wasn't it, Lewis, when the pension income became subject to 10% tax rather than 0.
We did change the regime, so up until April this year, people that had already moved to Portugal still have that exemption. So foreign pensions are always exempt in Portugal, regardless of the country of origin and regardless of paying taxes outside of Portugal or not. This was heavily attacked by foreign countries. Sweden and Finland, well, Finland actually revoked the treaty with Portugal. Sweden, there is a treaty renegotiated, but Portugal never really approved the new treaty with Sweden. France and Germany had given some instructions to Portugal that if we didn't change the regime, they would challenge the treaty with Portugal. So what Portugal did was introduce a 10% flat rate on foreign pensions and a tax credit. So in case these pensions are actually taxed in the country of source, we will offset that tax up to the limit of the 10%. So for people that actually could benefit from 0 tax on pensions in the home country and in Portugal, a 10% tax will apply for those moving into Portugal after April 2020. And if there is actual tax paid abroad, and in some countries there are, or some types of pensions, there are taxes paid abroad, we will deduct those foreign taxes against 10%. Further attacks on the NHR regime from a Portuguese perspective, I would be quite surprised, because the regime was created 10 years ago, more than 10 years ago, 2009, by the Socialist Party. So this regime was introduced by a socialist government, and it has already survived 5 complete years of the most left-wing government we've had over the last 40 years, with the support of the Communist Party and the left-wing bloc. So it would be a total surprise if the NHR would be changed in any way, making it worse or revoked altogether. We don't expect that. As far as we know, the Portuguese government and the Prime Minister is a key sponsor of the regime, and they consider this as something that it will be very important for Portugal, or has been, to attract foreign people to move into Portugal. Well, after COVID, the Portuguese economy will struggle. We will be struggling for foreign capital as much as we can. Any foreign investment will be highly regarded in Portugal, because we really need that to come out of the financial crisis that we will have over the next, nobody knows how many years, but it will not be 1 year or 2. So it would be, well, first of all, non-strategic at all to change the NHR or to revoke it. And I don't see that happening, especially when it's sponsored by the main political parties in Portugal.
Yes, it's important to note that when they changed from 10%, from 0% tax on pension income to 10%, that change did not affect those who had applied for NHR status prior to that change. So Portugal has a history of not applying taxes retrospectively, and that is why, in my view, it is better to apply for NHR as soon as you can, so that you lock in this 10-year tax holiday in case there are changes. As Lewis said, he doesn't believe there will be. I'm not so convinced personally, Lewis, so we may have to agree to disagree slightly. The other European Union nations continue to put Portugal under pressure, as indeed they do with any tax advantage regime, on the basis that you're being really unfair to us by attracting residents to your country who we'd like to remain in ours, paying tax at full rates. So it's really unfair that you're attracting them to your country, which costs us revenue.
Well, Howard, if I were Portuguese Prime Minister, I would say then I will demand the UK to eliminate the resident not domiciled regime, which has been around for almost a century. I would demand Ireland to eliminate the resident not dominant regime that has been over for a century. Malta to eliminate the resident non-dominant position, which has been as old as UK in Malta. I would demand Luxembourg to eliminate its special regime applicable to companies. I would demand Ireland to eliminate the special regime applicable to multinationals. I would demand Italy to revoke its special regime applicable to foreign millionaires. I would also demand Greece to eliminate its special regime, also eliminate from the special regime from Cyprus, eliminate the double tier structure from Malta. As many people would say, the UK is in no position to demand anything from anybody, to be honest.
I agree with you entirely. It's a game. Every country has special regimes, but most of them are under pressure, and most of the smaller countries are being bullied by the bigger countries. I'm not saying it's right, it's just factual that Portugal doesn't have the same clout as the UK in the EU. Well, the UK will have none. And other bigger countries who are always forcing smaller countries to do things which they are, to stop doing things which they're doing themselves. They're hypocritical, but it's a fact of life. So, you know, we have to live with those things.
We haven't changed it. Which is why we didn't change the regime.
Yeah. I'm with you entirely. Don't worry. It's not my it's not my desire. It's just me being realistic, I think, about what goes on in the world and certainly in the tax world. Thank you all for attending. We are past time. I think we're all happy to stay on the line if people are interested, but we said we'd cut at 10, so we better do that. I'm being asked by our marketing department to tell you that there is a survey which will be sent to you and ask you very kindly to fill it in. It's very short and to the point, so I hope you would wouldn't mind participating in that. As they say, there's no such thing in a free lunch, or in this case, a free webinar entirely. We're available for questions by email, and we'd love to hear from you. I hope you found that to be of interest and of value. There are a lot of questions unanswered, I'm aware of that, but time is against us. So thank you all for attending. If there's demand, we'll try and repeat it and get into more detail. But otherwise, everybody have a good day wherever you are. As I say, I'm in Portugal, where the sun is trying to break out unsuccessfully. I hope it's sunny where you are too. So goodbye for now.
Thank you. Bye-bye.
Okay.
Bye, thank you, goodbye.
Thanks, everyone.
Cheers.